Well, welcome everyone to today's webinar titled Treasury and Risk Management Systems. This is Brian from Strategic Treasurer, and we're pleased you could join us as we analyze and discuss this section from the latest Treasury Technology Analyst Report. Our speakers for today are Paul Galloway, Senior Director at Strategic Treasurer, and Craig Jeffrey, Founder and Managing Partner of Strategic Treasurer. Welcome, Paul and Craig, and I'll now turn the presentation over to you.
Thanks, Brian. Good morning. Good afternoon, Paul. I know we're in a different time zone, but it's good to be here. Thanks, everybody, for joining. I'll turn it right back over to Paul in just a minute, but thanks, everybody, for downloading the report, for reading it, and joining us for today's webinar. I know there's a lot of content to go through, and I know some people are in places where it's really cold and others are experiencing fire, so really appreciate those who are able to show up despite those traumas and challenges. But Paul, I'll turn it back over to you.
Great. Thanks, Craig. Welcome, everybody. Trust you had a good new year and you're starting off on the right foot. Today's discussion topics include the current situation, some of the challenges that people are facing with regards to Treasury technology processes. What are the foundations, what are some of the innovations that we're seeing out there? And, how does a TMS help organizations function better? What are those areas of opportunity? As well as some of the emerging technology that's been coming out in recent years that are impacting TMS, and as well as selection implementation. What does a roadmap to success look like? When it comes to this, a lot of organizations we find start the new year out considering these aspects, and hopefully you can walk away from today's presentation with some tools that you can take with you. With that, Brian, can we go to the next slide? Or Craig, are you operating that?
Yes.
Okay, great. Thanks, Craig. So when it comes to the current situation, what we're seeing out there, especially around global geopolitical current status, what's going on, there's been talk for some time about a U.S. recession or perhaps a global recession. We're seeing some pain points in various regions. There is impact to organizations, especially organizations that have a global footprint. So when it comes to economic standpoint, recessions are something that you got to keep an eye on. Will we get there in the U.S.? That remains to be seen. It feels like maybe we're not going to, but we do have a Fed that has been lowering interest rates recently. What are those impacts? How do those impact Treasury teams that are managing cash when it comes to returns on cash, when it comes to liquidity management or capital management, that cost of acquiring funds from your trusted partners? There is a cost inherent to that, and you got to manage those things. Lots of activity, whether it's actually on the ground happening today, such as in Ukraine or Israel in the Middle East, saber rattling by China, threatening to overtake Taiwan, or at least take back Taiwan. There's lots of talks of confrontation out there, wars or confrontation. This certainly has an impact when we think about shipping, consumer goods, trade. These have impacts on organizations across the globe. So we have to keep, as Treasury professionals, we have to keep an eye on what's going on out there. And of course, leadership changes. The Canadian Premier just stepped down, and we have a new president in the U.S. taking charge. So these are all factors that can have impact on how you as a Treasury professional make decisions and help your leadership understand what's going on in a changing environment. One of the other things we're seeing out there is challenges to staffing. There's age cohorts or manual work that's still being done out there. You would think in this day and age that there wouldn't be a lot of organizations that are still doing things manually, but we still find that there are organizations out there that have workflows, processes, procedures that require a lot of hand-holding or manual in nature. That hasn't gone away. The other thing is attracting and retaining talent. This continues to be a challenge for Treasury departments, in particular with demands being put on Treasury departments to provide more information and do more. It's no longer just blocking and tackling. It's you have to step up to the plate, provide information, and become more of a strategic thinker within the organization. So Treasury has broadened the footprint. Being able to be efficient and up to date in terms of doing things is really important. So data analytics, I think, is a step where Treasury is beginning to have more focus on. This would be forecasts, producing reports, providing visibility to cash, liquidity, capital. These things can be seen as competitive advantage to organizations. Taking data, getting that information, synthesizing that, having to tell a story as to what's going on out there. This may be things tied to consumer behavior, products for an organization or services. This data is available in particular through all the activity that Treasury touches. Another area where we're seeing a lot of focus is around security, in particular payment security. We think about a Treasury team or a treasurer in particular being the superintendent of payments. Do they control everything within the organization? Not directly, but they do set the tone in terms of what payment security is, the processes and procedures that should be followed, set the tone for having the right tools and partners out there to help you mitigate risk against fraud. We have more and more people today as a result of COVID that are in a hybrid work environment. They work in the office, they work from home. Anytime you have somebody that is working outside the organization, you got to have certain protections in place to ensure that fraud doesn't happen. And we're seeing the fraudsters that are more and more sophisticated. They're using technology against organizations, whether it's artificial intelligence, machine learning, or other things, to steal money from companies. So Treasury teams have a burden to become more informed and stay up to date and use tools just like what the fraudsters are utilizing to help protect the treasure for the corporation. We're also seeing an uptick in compliance burden. KYC, PCI, DSS, and FBAR have been around for some time now, but now we have BOI is beneficial ownership interests. This is new reporting that is being required by organizations, and companies need help with this compliance part. It requires that you fill out certain documentation a certain way. It requires that you report in a periodic manner, and that you have all these controls in place to ensure that the information is true and correct and being protected. So compliance burden continues to be up there.
A quick update on BOI. That was scheduled to start January 1st. Then it was delayed to the 13th, around the 26th of December. Now it's put on hold, subject to some additional review. Voluntary filing is permitted now. So this has all changed since Christmas. So just a lot of late breaking things on BOI. FBAR still there. Voya's a bit on pause, but still, the accounting world recommends filing things on a voluntary basis. So this just in. So sorry for
Thanks, Craig.
breaking in there, but
No, appreciate that. Good ad. And we think about the operational needs of an organization, efficiency, scalability, flexibility. Organizations are growing in complexity or footprint. These are all things that are important to companies today. Next slide, Craig, unless you have any additional comments you want to make. So this is a polling question that we had out. Are you currently any responsibilities that you don't have time to perform? This is something that we ask of Treasury professionals, treasurers, and 46% say yes. So, nearly half the people that answered this question are strapped for time to complete things that are needed to be completed. Treasury teams have greater demands. They have less bandwidth than perhaps other departments within an organization to complete some of these tasks and demands that are being called upon them. So Treasury teams have to become more efficient. This is just a way of showing that efficiency in processes, procedures, technology, people, it's needed. And Craig, I don't know if you have any additional comments on this, but nearly half, that's a lot.
yeah, I mean, treasury groups have long been thinly staffed, and while there is a general increase each year in the percentage of companies that have added to staff, they're not adding a lot, and it usually falls in the range of a net, 12 to 18% of companies add treasury staff. Very small, but responsibilities, almost everyone identifies we have more responsibilities this year over last year. So this is kind of the situation, right? There's responsibilities you don't have time to perform, and the use of tech can help shrink that number down somewhat.
Definitely. I think we're up for our first poll question. And if you don't happen to see the poll question, you might have to move some things around on your desktop to pull it up. We do have on the slide there some pointers, whether it's move things around, make sure you're logged into the Zoom app, utilize the Alt tab to toggle between windows, see if you can find it that way. But with that, the first poll question, what is your organization's current stage in the TMS adoption or upgrade process? This first one, we have two poll questions here. This first one, it's a single choice. Is it actively evaluating TMS in the selection phase, in the implementation phase, using existing TMS, no immediate plans for upgrade, not currently using TMS or no immediate plans or unsure. Single choice for that first poll question. And then the second poll question, as we scroll down here, what is the biggest challenge your organization currently faces in selecting or implementing a TMS? Again, single choice. Is it lack of internal resources, integration with existing systems? Is it cost? Defining specific needs and priorities? Is it vendor selection, comparison? Not pursuing or still evaluating options? Or again, unsure? We will give people a few minutes to select on that. And I think, Craig, we talked about if people, and I think, Brian, you're going to drop down a link within the chat box here to CTM file. And I think, Craig, you were going to talk about what CTM file is. And if we get enough people to join up on CTM file.
So we're not asking people to type the word pull in or TMS. You could type the word TMS if you like in the chat box, but we're asking people to connect to CTM file on LinkedIn, so you don't need to type it in. But we've got everybody trained on all our webinars that they type it in, which is awesome to see that happening.
It
But
is.
Brian will try to keep it there. So we're asking people to follow CTM file on LinkedIn. So that link will pop in. There's 2,200 people that follow it on LinkedIn. We're trying to get that number up on LinkedIn to over 2,250 today. So just 50. A very small percentage of those people that are on here today. Would love to see that. So Brian will keep putting it up. People keep typing in TMS in that box. And then we'll also want you to subscribe to a free weekly newsletter. It's a media site covering cash and treasury management information. CTM file stands for cash and treasury management file. It's just a way of sharing information. It's a site owned by Strategic Treasurer that we acquired, headquartered out of the UK, and a lot of good information, a lot of content. We're putting out a lot more video content there as well. So please follow it on LinkedIn, and also the newsletter. If you go to ctmfile.com, there's a little newsletter icon. You can type in your preferred email address. So we're good there. That'll be the key number. We're looking for 50 people on LinkedIn, and we'll send all of the results from today's poll question. All right, Paul, I'll probably say a little bit more on that the next time we have a poll question. But did you want to comment on these, or did you want me to?
Yeah, I can go ahead. It looks like we got results in for the first two polls here, and we got about 25% both unsure and using existing TMS, no immediate plans. We have 20% roughly that are not currently using TMS and no immediate plans. We do have about 15% of the people that are evaluating, and fewer that are in the selection phase and implementation phase. So we do have some people that are active out there. We do have some folks that don't have plans, and a number of people that are just, unsure. So my hope is going through this webinar today that those folks that are unsure, we can help you with any questions you might have post this webinar for sure. And hopefully we'll be able to provide you some guidance for maybe considering why a TMS may be good for your organization. When we think about the biggest challenges, we've got 1, 2, 3, 4 areas that are pretty close, roughly around 20% each. Lack of internal resources, that's pretty common. We see that with a lot of organizations that we've helped over the years. Integration with existing systems, whether it's ERP, bank systems, admin systems, that's certainly a challenge. That's something that we have helped numerous companies with their implementations. Not sure pursuing or still evaluating options. That's pretty common to see a group in that bandwidth, and here we still got a group that's kind of unsure. Cost tends to be a factor. It does come up with many organizations, especially around budgeting. This is a time of year where you see that budgets are being considered. Cost has got to be a factor for organizations for sure. So not necessarily surprises there. Craig, did you see anything that stuck out that maybe was a surprise to you or you didn't think was going to show up that way?
Well, one thing that I would comment on is the cost factor. We'll get that onto the next section. We talk about foundations of treasury technology. That's been shifting a lot. So if you took this same poll 5 years ago and 15 years ago, those numbers would be for cost would be higher and very high as you go through this. So we'll talk through that in just a moment. But that's we really appreciate everyone answering those questions. And responding to the poll question. So yeah. So our next section that we're talking through is this idea of combating fraud. Paul already mentioned the sophistication of criminals who are trying to steal not only data, but steal funds, of course. And this is a question from the Treasury Fraud and Control Survey not too long ago. We plan to spend more on Treasury fraud prevention, detection, and controls. Half of your peers say management concerned about the threat level. This is very reasonable because of the sophistication of the criminals, the automation of the criminals, and how that's yielding them a large sum of cash each year. A quarter identified it as, hey, once we had a loss, we're going to spend money. And I always think about that. You close the barn door after the horse has escaped. But that's a quarter. Double that number are concerned about the threat and are closing the barn door before the horse has escaped, if you get the metaphor there. You know, the pandemic, this was more current at the end of the pandemic, so not as relevant now, but customer requirements were also happening and helping. One of the things that we've seen towards the end of 2024 is a security review by a consultant or an auditor. People are far more engaged in that, have been far more engaged in that in the last half of 2024 than they were in the first half of 2024, and notably more than prior to that time frame. So quite a bit there. Fraud is making a difference. So what are some of the things that are the foundational aspects that support innovation and functionality requirements for people? I'm going to be quick on this. There's quite a bit of content here. You'll get the slide deck. You can read through it. A couple pieces here. Data and compute. Data versus processing power. Data is doubling every 2 years. It's a 40 to 45% increase each year. 40% basically gets you a doubling every 2 years. Your organizations are spitting off and ingesting more data than ever before. That's the challenge, right? We're overwhelmed with data. The other benefit is processing power. The cost for compute is halving every 1.5 years, or the processing power for the same cost is doubling every 1.5 years. So we have more processing power to help harness and churn through the data. That's that top section. Democratization of technology is another piece that I wanted to point out with regard to the cost question on the prior polling question. Technology, if you go back 15 to 18, let's say about 18 years ago, 20 years ago, companies that use treasury management systems, for example, were almost all above 4 billion in annual revenue. 4 or 5 billion tended to be the low spot. There might be a few complex $2 billion companies. If you go back 10 years ago, that's come down to the billion range. And then if you go back 5 years ago, 4 years ago, we see that coming down to under $500 million in annual turnover. Why is that happening? Well, there's more capabilities. They're delivered more easily without as much setup. You no longer have to have a test, development, and production server on premises. It's all delivered through the cloud. So functionality is improving. The cost of delivery is decreasing, which means more companies are getting it, hence the term democratization of technology. And this is continuing. This is a significant benefit across the scope. And so cost becomes less of an issue for an increasing size of the market. On the lower left, we have connectivity. Host to host, this is you have a secure FTP connection or a different type of secure connection where you're connecting individually to each bank. We also see changes with other technologies, but application programming interface or APIs, particularly for the largest banks, are very readily available now for balances and transaction data. They're increasingly available for payments. So it's a faster setup, easier setup as we move through that arena. The challenge is how many banks can do it and how quickly they're adding that functionality. But connectivity is making a change there. I'm trying to go faster, but on the speed side, payments, visibility, and data, nothing is getting slower. We know that. Not everything has to be instant. Some stuff is a day process. I mean, you can't speed up certain things, but nothing's getting slower. There are many use cases for payments. There's more focus on data than speed in the majority of use cases, but they still exist. So speed for analysis, speed of getting data. There is a trend and it's in one direction. It's not all immediate, but it is moving faster. The hosting models, I would assume almost everyone's familiar with that. But just if we go back to ancient history, right after the dinosaurs went extinct, we had on-premises software. I know some of you probably still have it now, where you had your own servers. And then what was changed was that same type of software could be hosted in the data center. It was still a single use, single vendor. You might even have separate hardware, but you no longer have to maintain the hardware, do those updates. Someone did those for you. That changed and became software as a service, where usually that's multiple tenants, multiple companies running on the same platform, supported in one place. So you achieve significant economies of scale. As we think through that, you might be familiar with some of those terms. So as we've moved down and as we talk through this, and the next slide, we'll talk about the rate of development and the value of an investment in the technology. On-premise models usually declined in value over time. It was hard to keep them updated. And then as they reached towards the end of their useful life, it would decline because they weren't doing development. You would skip some patches. So now we've moved consistently to models where there's increasing value over time. On the right-hand side, you can see some of the emerging technologies. I'm just going to leave those as a list because on our next slide, we've got a few more things to talk about there. So AI, having machines think like we do, whether it's the form of machine learning where you can detect patterns and detect anomalies, what's normally happening, what's new. So things like fraud detection, detecting patterns for forecasting, for quality control, for accounting, for classifications, for cash positioning. Those are all being done now, and the capabilities are significantly better than 6 months ago and then 2 years ago. Generative AI for documenting, communicating, summarizing, reporting, checking terms, all of these are sufficiently improved from what existed before. Just a few things on the business intelligence side. You may think of those as, what are my reports? What does my dashboard look? Can I self-serve and ask questions of the data I need, my financial data, my banking data? Can I do that? This is significant development and change. And so the BI tools are helping. We're putting more data into data lakes and storage areas within these systems. We can query, with a more complex querying method, but there's also more natural language querying. You ask a question like you would ask a person to get it, and it becomes available. This self-service also is the democratization of analysis. We didn't want to put two democratization slides together. There's probably some law against that, but that's what's happening. It's becoming easier. It's becoming available. The most common programming language now becomes English, in this world. APIs, this idea of open banking, I can get at my data or execute activities I want to execute in whatever system I'm working in. So APIs allow me to be in my TMS and connect to my bank, or be in my ERP, and act a transfer or pull in balances. And so this helps speed up the ability to see and integrate more rapidly. API libraries, API gateways can streamline integration, because now I'm just using the API to connect to one of the trillion-dollar banks, and the information flows in. The last one here, I do invite you to download the report. Hopefully, Brian, you'll pop that up in the chat box if you haven't downloaded the analyst report. Please do. Platform as a service, as opposed to software as a service, they're not separate. I mean, they are separate. They're complementary. This is where if you're running something that might be referred to as cloud native, I think we should think about how technology has changed over time. I'll try to give a really simple example, because I have to make up a little bit of time. In in the past, when you had installed software, it was tended to be monolithic, maybe a single system or a single layer of functionality. Then it became, 2-tier, 3-tier architecture. We have a database layer, a process layer, and a user interface. And so you could move out the database layer. That was an improvement over everything being integrated. And then we went to more layers, multiple layers. And so we moved down to microservices, where there's smaller and smaller components as we build things together, and they're built in natively. We're running them off of Microsoft Azure, Amazon Web Services, Google Cloud, IBM's offering. So now we can swap out smaller pieces without even shutting down the system and restarting. So there's this idea of the smaller pieces becomes more powerful because we can develop faster. We can move code in and out. It becomes more scalable. There's a lot more we could talk about that, but that's pretty important. As we've seen technology change over time, that continues to impact every area of business, every area of finance, and it certainly impacts the Treasury domain. All right. We'll move on to our second poll question. And this is a multiple choice. Select all that apply. Which emerging tech do you believe is most likely to impact your Treasury operations in the next 12 to 18 months? Select them all and select all that apply and hit submit. Yeah, so the link on CTM file on LinkedIn is at 2225. We had 25. We had half the number. Nice work. We just need 25 more, but there's no reason we can't get 100 more, right? So if you just keep pasting that into the chat box, we're not actually requiring anybody to type poll or anything in there. So excellent. All right. So here are the results. Most impactful, number one, APIs lead by just 5 people over AI and machine learning. And number 3, AI and machine learning, pretty big impact next 12 to 18 months. So if we were doing surveys, I would also ask for what's your view over the next 5 years, which will be more impactful. Will AI and machine learning take over then? But we didn't ask that. Number 3 is business intelligence, being able to sift through the data. Very good. Big drop to robotic process automation at 19%, and cloud native microservices 9, blockchain DLT 7, other taking the last place. So really interesting responses. Thanks for responding. And then if you look in the chat box again, signing up for a CTM File newsletter on ctmfile.com where it says newsletter, please do that. Our marketing people love it, will love it. Paul and I will be delighted. We'll continue to wear matching vests. See if you can wear a purple shirt next time. And if you do that, that would be awesome. So, Paul, we just covered AI was number 2 by a slight bit in the 12 to 18 month horizon.
Yeah, so not surprised by AI. It's certainly talked about both personally and professionally. The use of AI, I just think of my oldest daughter and her fiance. They're 28 years old and they use ChatGPT all the time. They look up all kinds of recipes, whatever. They use it quite a bit. And so not surprising seeing the survey, use self-learning or other personal uses. 54% in this survey are utilizing AI. So I think we're going to see this trend continue to expand from a work perspective. About a third of the respondents, it indicated they're using it for research or analysis in a work setting. I see that continuing to grow over time, certainly somewhat in the near term, but definitely on a longer term basis. Testing for work or evaluating for work applications, people are testing. So that's another subset. They haven't implemented it, they aren't actively using it, but they're testing it in an environment that's safe for them to do that. Do not use, have not tried. So we got some slow adopters, People are going to wait and then probably adopt at a later time. So this, I think this particular survey is not necessarily surprising. You know, from a personal standpoint, it's being used today. From a professional standpoint, it's what's going to be in the future if you're not currently using it. Next slide. So this is a different way to look at deployment of technologies. In this particular survey, grouped it into 4 different buckets per category. You know, currently using or not, currently using or implementing, that's the blue color. The green color we'll use within 2 years. We'll use within 5 years is that orange color. Not interested in using it this time is purple color. So I think about SaaS-based technology. We talked about this with TMS. It's quite prevalent from a TMS standpoint. You know, not surprising, about 2/3 currently using or implementing, or within the next 2 to 5 years, another roughly 25% add on top of that. So SaaS-based technologies here, it's adopted, it's being used, going to be used. APIs, they're picking up steam. They started out kind of slow, but API connectivity is picking up steam. And so the tier 1 banks Craig talked about earlier, they've got their API stables filled up. And we're starting to see that the tier 2 banks are adding APIs to their stable as well. But the other piece that has to happen is organizations utilizing APIs, but also the tech providers, the fintech providers utilizing APIs are setting up so that they can make those connections, utilize APIs for making secure connections and transporting data and information securely. APIs are picking up steam. Just looking at 2 to 5 years, we're talking about adding another 45%, doubling what we see right now in terms of being currently used. That's quite a bit. So APIs, another piece that we're going to see is picking up steam and more prevalent. Now, when we move down to the artificial intelligence, it shows here that 17% are currently using or implementing. But look at the number over the next 2 to 5 years. The growth in that category is quite significant. And I think that's just going to become commonplace when it comes to artificial intelligence. The one down below, the very bottom one, blockchain. This seems to be an application that's kind of struggled to pick up adoption and steam in terms of current use or implementing. It's been around for a while. The use cases for it are starting to come out in various areas, whether it's cross-border payments, whether it's tokenization or digital currency. Utilization there seems to be adoptable there. From a standpoint of Treasury technology, it doesn't have quite the steam as the other technologies here on this particular survey. Next slide. So basic functionality of TMS, cash positioning and visibility. This is one of the core strengths of the TMS. Connection to your banks, getting prior day files, current day files, the ability to see things daily, generate reports, and position cash is a major benefit for a TMS. It streamlines processes that are manual, where companies are utilizing downloads from bank portals and spreadsheets to do their cash positioning. It streamlines it. It brings all your banks together. You can see it in one place. You don't have to use a bunch of fobs to log on to a bunch of bank portals. You don't have to do a lot of manual work to get things in a spreadsheet so you can know what your current position in cash is. And a TMS provides you that visibility that's really needed. And so from a cash management standpoint, you gain efficiencies. You have a better way to optimize your cash, optimize your liquidity, optimize your short-term investment yield as well. So it provides a lot of cash management functionality and support. It brings efficiencies to managing your cash across an organization. But we're also seeing from a forecasting standpoint, a TMS is they're stepping up their game in terms of providing forecasting capabilities. Used to be you would have to upload your forecast into your TMS, and so that required you to do something outside the system, upload into the system to get a forecast in there so you could look at what the actuals were or the estimated actuals compared to your forecast. What we're seeing now is that they're utilizing machine learning, artificial intelligence to actually help enhance the forecasting capabilities of organizations, which is making the forecasting component a lot more important to a TMS. And it's allowing organizations to do it within the system versus primarily outside the system. The other thing you can do is you can hook to your admin systems, whether it's AP or whether it's collections. You can funnel that information into your TMS to help you with forecasting and cash positioning as well. With a TMS, you can take your prior day information from your banks. You can collate that. You can apply accounting codes to those transactions, and you can export that to your ERP, your accounting system. And so TMS will make the greater efficiencies by having all your bank information in one place and delivered to your ERP in one file. I alluded to earlier integration to internal treasury systems, whether it's admin systems or ERP, your TMS has that capability. You can provide information, you can send it, you can receive it. Next slide. So what are some of the core challenges? We talked about staff earlier. Staff tend to be overwhelmed in many instances within Treasury. We're seeing that the demands by Treasury and the number of people that Treasury team has is not necessarily sufficient to meet what the requirements are. So lightly staffed, increased demands, that brings you to an overwhelmed Treasury team. So gaining efficiencies is really important. That's where a TMS can help. You can streamline things. You can get collated into one spot. It makes it easy to do the work that you need to do. And you can focus on areas where that gap, that 50%, they don't have enough time. You can start focusing on some of those things. TMS can help you with that. Economic volatility. There's a lot of things that are happening out in the world. We're seeing that changes tend to happen rapidly. There are impacts to organizations, so risk management is really important. Treasury management risk system can help you manage those risks. Components that Treasury teams typically manage include your foreign exchange volatility, your interest rate volatility are the common factors that you tend to see. These systems can help you manage those risks across the organization. When it comes to external connectivity, manually gathering and formatting data, that's a really huge and strong component for making the case to do a TMS selection and implementation. These manual processes where you're downloading data and information, then you have to format the data, you have to collate it, you have to put it into a report, and then use that information to make decisions. It's not very efficient, but being able to connect to your banks and bring it in one place gains efficiencies. It's an important component of the TMS. Of course, data and analytics, being able to provide data to your data lake out of your system, to your ERP and admin systems, to be able to do data analysis and to do the functional work that you have to do, streamlining is an important component of TMS. The straight-through processing, so you don't have to do any manual work. In the case of the TMS, you're not doing things manually outside a system. You're not going to a bank portal to enter payments. You have one area that you're going to effectuate transactions, to do workflow, instead of doing that outside systems or in various manual steps. And of course, the security and control. This is certainly an important component to TMS where value comes in. Being able to have security and controls in today's environment for processes, procedures, from technology standpoint and from an individual person standpoint, I think is really important, as well as providing that visibility that some organizations just don't have when you're dealing with multiple banks, multiple systems, and bringing that all together to collate it and knowing that you have a trusted source of truth for your data. A TMS can help you do that in one place. I think, Craig, do you have the next couple slides, I think?
I do. Yeah, thanks everybody who's followed CTM File on LinkedIn. We have 34, looking for 16. And that brings us to sentiments, because we talked about technology a bit today. We're also going to cover on the next slide one about emerging tech. What are your peers thinking about? What are your peers thinking about? How do you feel excited about the development of new technologies? 84% agree or strongly disagree. Very much in favor of that. And the view is that you'd rather upgrade tech than hire more staff. Usually there's a restriction on hiring staff. So 50% agree, 37% are neutral, 13% want the people. We're appropriately staffed, fairly balanced, right? Agree, 40%, strongly disagree, 35%, fairly neutral, about 26%. Not as wholly understaffed as it has been in the past, but that's where you go. The next two slides, I think is worth bearing in mind as you work with your team, as you work with others, maybe as you work with yourself. I'm concerned our staff is not upskilling with new tech quick enough. 38%, that is significantly more than the 28%. So, 4 to 3, about 33% more, a little bit more than that. 35% more are concerned versus not concerned. That's a sizable number. And then the individual view, I am nervous about innovations in AI, machine learning, RPA. 34% disagree, 32% agree. Pretty balanced across the mix there. So there's nervousness about innovations and excited about the development of technology. What does that mean? That means that we should learn more, stay on top of things, make sure we're talking about that as a group. You're staying on top of things through reading, through webinars, through ebooks, white papers. Quite a bit of interesting developments there. On the emerging technology side, what's happening and what's impacting the TMS? We spoke a little bit about AI and machine learning and this idea of if you detect patterns, you detect what's standard and what's anomalous. That can help you with quality control, fraud, forecasting, positive or negative. If we look at analytics, it helps with that self-search function, but also can clean data flowing in and out of your data lake, your TMS, and allows you to do additional analytics. The self-serve functionality is powerful. We already talked about speed as an issue, but the emerging tech is not just on APIs making things faster, but that's also finding its way to payment rails and newer payment rails. Is it valuable to be faster? There's certainly some use cases where that's extremely valuable, other cases where it is mostly valuable. Nobody's asking for slower. I think we know that. On the microservices and miniaturization, what you see at the upper right-hand part of your screen, this is helping this whole set of technologies to increase in value and increase in value substantially as you hold it or as you use it. So instead of buying an asset and watching it depreciate, your acquisition of a treasury management system that's using the newer services, is growing in value more rapidly, even if you don't use all the pieces. And that is a shift from the past, and that matters. That matters quite significantly. So anytime you make a selection, you still need to consider the cost, the effort required to put it in place, what you're getting out of that. But this is significant. This helps for faster development, faster rollout, and an increase in value over time. And then the last one I'm going to talk about, I'm going to skip over APIs because I think we've covered that sufficiently for sure in today's webinar. Enterprise Liquidity Management, ELM, which is a term we have used and had documented several analyst reports ago. This is the idea of like an ERP, Enterprise Resource Planning System. Enterprise Liquidity Management is, are these vendors that continue to add capabilities and functions beyond what used to be the traditional TMS only view of where's my liquidity in my banks. Maybe I add my debt, my investments, then I add FX. Maybe I add other flows so that I have a more robust, complete view of my liquidity across more domains and across a longer period of time, not just short term under 90 days or maybe a year. So we invite you to read that section, look at how we put that together and designate that as a category. So how and what would you want to use? What are some tips to obtain a solution? Or if you have a solution, how do you make better use of it? There were some questions in the chat box. I don't know if they're to everybody or just to us. It's just to the hosts and panelists. We are using a TMS, but not utilizing the functionalities to its capabilities. We have to still log onto each bank website to do many tasks. How should this be brought up to the team to help it to be more efficient? That's a great question, though. And it might be certain functionalities aren't working. It might be not configured right, or you're not connecting to the bank, or it may be certain services that, let's say if you're looking at images, those tend to be only available through the bank portal and not some of the other underlying systems. But there are ways to solve many of those challenges. Some of the images, you can have those imported if you're relying on images. But this idea of what's the most efficient way to handle our activities, what allows us to scale, should be the team should be discussing the different workflows or work streams that exist to provide that support. So tips for obtaining your solution. I tend to run a little sarcastic or dry sense of humor. If you look at the business case, you put the financial case, the return on investment, there's a strategic case, right? The reason that we operate, what we're trying to accomplish, and then there's stakeholder buy-in. You can have a great ROI. If you don't have stakeholder buy-in, people are going to, promote something else. ROI is something very few people argue against. What's the ROI? What's the return on investment we're expecting? And so then you put together your fiction to go against other people's fiction. And I say that, not that it's all fiction, but the reason why you put in technology like TMS isn't just because you can have an airtight ROI financial model, but it is because you're saying, what are we trying to do? We need to have full visibility to where our cash is at all times in any bank, in any currency. We want to have an accurate forecast. We want to streamline what it takes to do accounting, how we manage some of our risks and exposure, etc. Some of those are easy to track into an ROI. We save 5 hours a week on accounting creation. We used to do 10, now we only have to do 5 times whatever makes a sense. But the key part is the strategic case. How are you managing your cash? If you're a small business with one account, 20 million in sales, a single bank, you don't need a treasury management system. But if you're dealing in multiple banks, multiple currencies, significant flow, the value of a forecast is high, you're making the strategic case, the ability to scale, the ability to properly manage your funds and to provide that type of care and stewardship I would say this, just as if you've been on webinars and I've talked about this before, I'll leave it this way. What's the ROI for doing or doing monthly reconciliation? I think, if someone makes the case, oh, we need to do reconciliation every month. What's the ROI for doing that? They're going to look at you oddly, like that's not an ROI case. It's something that has to be done. How do we know that our financial reporting is right if we don't have some method of checking and tracking it? And they're right. That is a standard of good corporate conduct. Might even follow GAAP. And the reason for asking that question is what makes the most sense for the organization to do? What is essential to operate? It's a cost of doing business. And that's the same for many organizations for using technology for visibility, or more broadly for acquiring a treasury management system or a treasury risk management system. What's the business case? What's a standard of good corporate conduct? What do we need? Do you need it or do you not need it is really driven from the strategic case. Which one do you select? How do you implement that? That's where you have to start making the trade-off on which is more expensive to put in, to run, and what are the values that a particular system or provider may give you. That's where the decision should be. The other part of the business case is making sure you get buy-in from multiple parties. Treasury, of course, accounting, maybe procurement, maybe the fraud group or security. Make sure you're talking to those areas. On the selection side, and I'll try to go fast here, focus on a short list of vendors that make sense and spend more time with them rather than trying to go with the top, 12 or 15. Discuss the overall ecosystem, how they provide the solution set to what you need today, maybe what you need tomorrow, meaning very short term, not what potentially could develop over the next 30 years because those systems are changing. And selecting somebody who's on new tech, who's developing and growing, expanding the value of the business, they will likely stay ahead of you if it meets your majority of your functionality needs. On the implementation side, be realistic with your team. You can't implement this off the side of your desk if it's any sizable implementation. And then just a couple things to keep in mind. Your departmental organizational needs may change over time. The newer age cohorts won't do manual processes. They're not just lazy, they're smart. The tech is available, put it in. Otherwise, you're going to find yourself 15 years into your career doing manual steps because you can't hire someone to do these manual processes that could be automated. The other function here on obtaining your solution is you may obtain and evaluate one or two of these in the course of your career. Working with a consulting firm like ours or like others to figure out what your needs are, what's the best alignment, can save you a lot of time and effort that may work against your function and mindset. It's like, I can figure this out. I can do that. But is that the right thing for your organization? Do you have enough resources and time to do that for something you might do once every 10 years? It's just something to think about. Clearly, we have a bias. We help firms with that. I'm saying that, but the idea that your organizations don't do this all the time, makes it at least a reasonable question to consider. What's the right thing for our company for the long-term success? Does that make sense? And how do we protect against not learning what we need to do in our organization? That runs us to the top of the hour. I turn it back over to Brian for final comments.
Well, thank you everyone for joining us today. The CTP credits, today's webinar slides, and a recording of today's webinar will be sent to you within 5 business days. Be sure to download the Treasury Technology Analyst Report and be sure to register for the next webinar in this series that will be on Treasury aggregators. The links to both can be found in the chat box. Thank you, and we hope you have a good rest of the day.